Well, good morning to all of you who have joined us and those who will be listening in on the recorded session. I'm Richard Seeline. I'm the co-founder of the Resilience Innovation Hub and now Global Collaboratory Network. We have a great tradition. This is now the second year of doing a year in review, a year ahead national town hall with folks that are a lot smarter than I'll ever be, who come from different perspectives of the areas of resilience and technology and emergency management and community engagement, as well as from the perspective of the insurance sector. So I thought what we would do today is we're going to do kind of two round robin parts of the session. We'll start on obviously the year in review, what's happened, what did we learn, have a little dialogue amongst ourselves. Those of you who have joined us, please send in questions either through the chat or the Q&A portion, because we'd love to make this interactive as well. And then we'll do a second round robin on the year ahead. What do we see? What are we working on? What's emerging, and then I'll conclude with a few announcements of what we believe is an exciting result from the work that all of us have been able to do together under the hub in 2021 and some things that we're working on in 2022. So with that, no further delay, I want to ask Jack, if you would, and each of you would, if you take a minute, introduce yourselves. We'll start with Jack, who you are, what a little bit of your background, and then Jack, I'll pull up a couple of the kickoff slides that you're going to lead us through, and then we'll turn to Elle and have Elle share her comments, turn to Paul Robinson, and then ask Michel Leonard from the Insurance Information Institute on this first round robin to share some of the great work that he and his team have been working on. So Jack, take it.
Very good, and thank you, Richard. As they say, I'm a longtime listener, but a first-time caller. So really excited to be here with everybody and sharing my day-to-day work. I work for the Georgia Emergency Management Agency. We're the state-level agency that administers FEMA hazard mitigation grants. In addition to that, a lot of my time is dedicated as the co-state chair for the Silver Jackets team here in Georgia. Some folks may be familiar with that. That's associated with the Corps of Engineers, federal, state, local partnership there. So I would say that I have sort of a full peril portfolio, but flood is definitely my peril of passion, if you will. This slide here has been one of my sort of go-tos since it came out, and it's from the National Institute of Building Sciences. You can see this natural hazard mitigation saves report, really consolidated. We see all these hazards across the left-hand side going across the top. We see these different benefit cost ratios associated with different activities, whether those are building codes, whether those are federal grants, lifeline retrofits, really consolidated. And I think it speaks really well to sort of those community chief financial officers, if you will, right? Some of these conversations on climate resilience happen sort of at the execution level, right? The sort of public works director, the city, county, township engineer, planning and zoning director, but ultimately it's really a C-suite chief financial officer decision. And so we think this speaks well to them. Anybody who looked back at the 2021 town hall certainly saw kind of benefit cost as one of those themes. And I think that one is clearly a theme that's going to go through all these year-end town halls moving forward, right? If we want anything even close to public-private partnerships, we got to be putting dollar signs on the work that we do. So I would encourage everyone to check out this National Institute of Building Sciences report. If you could forward one slide for me, Richard, please. The second slide here, again, is another one that has sort of been a recurring theme in my presentations throughout calendar year 21. I think the folks from the insurance industry are probably familiar with that Venn diagram there. Certainly that terminology of risk is the intersection of hazard, exposure, and vulnerability. I would say I'm the chief plagiarism officer for our state. And so I clearly picked up that idea from you guys and said, hey, I think this will make some sense for us in terms of how we frame different perils. where we're building, how we're building, and then I think increasingly that vulnerability, not just of the performance of the built environment, but certainly vulnerability of the populations themselves, right? We have this huge focus now, I think, particularly at the federal level under the Biden administration, of equity. So again, hitting this return on investment piece, where I sit, we see these sort of service delivery areas across the bottom. As I said, I administer a FEMA sort of portfolio of grants. So we tie these back to these community lifelines, but we're really talking about avoided losses or avoided service delivery interruption. That's really what we're in the business of. So it's still that return on investment or the cost effectiveness argument, just framed a little bit differently than, say, we're investing in advertising and we hope to grow our sales. We look at these asset management principles and really this apples to apples comparison of sort of pre and post mitigation investment. A couple of lessons learned for me, or big themes of 2021. Already mentioned one of them, equity. I think that's a huge piece, whether we look at the Biden administration talking about Justice 40 and just everything we do. I think that's something that is really changing the optimization equation under which we operate. And I think that's really a unique element. I'll come clean. I'm an engineer by background, so have a little bit of technocratic lean to me. But so we still want to be data driven, but we just want to be more mindful in the equity space of sort of what those variables are that we might be looking at to make that data driven decision. A couple of surprises, I think, for where I sit, the National Flood Insurance Program. We sort of got the first, maybe lesser half of risk rating 2.0 underway. I won't steal any of Michel's thunder there. Definitely want to leave that out for him to touch on as well. Similarly, public comment out for the floodplain management regulations of the National Flood Insurance Program caught me by surprise. Maybe there were some folks who had caught wind of that earlier, but certainly an exciting opportunity, I thought. And of course, the infrastructure bill. When we talk about the bipartisan infrastructure bill, you couldn't realistically have a 2021 year in review without touching on that. So with all these folks behind me, I'll get out of the way and look forward to hearing their comments and coming back around on the roundtable.
Jack, I think you hit on, a solid set of themes that I was hoping that, a couple of them that we would also, cover. Especially this real emergence of a new perspective on cost benefit and return on investment. So Jack, thank you for kicking us off. I'll steal a little bit of a secret that Jack will be joining us as hopefully as one of our new executive mentors across the country in 2022, especially with Jack's great boots on the ground experience. So Elle, you're up next. I'd love to hear all of the great work, excuse me, that's been underway with the Atlas, but also just all the fun things that you're observing across the country as you deal with different, municipal and local governments.
Yeah, thanks. And I'm really excited to be here. Thanks for including me. I'm definitely going to provide a little bit of a different perspective. My background is in resilience. I spent a lot of time working in that space, but in the last few years have kind of shifted a little bit. And so hopefully I can provide kind of a different perspective on what we're hearing from cities and communities on the ground, and also a lot of color from the tech community. So quick introduction. I'm Elle Hempen. I'm one of the co-founders of the Atlas. The Atlas is an online community built exclusively for local government decision makers. And our mission is to create a safe space and a one-stop shop for local government learning, to create a place where local governments can search through a database of how solutions are being deployed in cities across the country to solve specific challenges like resilience at a macro level, allow city officials to query each other and crowdsource ideas in a city's only community forum. And so we're really focused on being that place that any city official can turn to first and say, I've got this big giant problem. I know other people are solving it, and how can I learn really quickly from those experiences? I love the chief plagiarism officer. We talk about city R&D, which is cities ripping off and duplicating in the most positive way, right? There's no reason to recreate the wheel. So that gives me a really unique perspective about kind of what's happening across the country. And then I'll just say we are a for-profit company. We work with then companies to help educate those companies, make them better partners by providing lots of data about what's happening in the market across the board. So with that, a couple of quick lessons learned and surprises from this year to add my perspective to the conversation. Then we can kind of pick each other apart a little bit. But I think the number one lesson learned for me in 2021 is just that government officials are overwhelmed. There is a whole series of huge challenges that have come to light in the last year. You know, the pandemic was obviously a shock to the system, but there have been, as you pointed out, Jack, you know, huge social adjustments happening, both in how work is being done, big questions about equity, racial equity, gender equity. I mean, I think there's just all of these big, huge topics that ultimately local governments are the people responsible for solving, right? They're the people and the boots on the ground that are being asked to solve these big, huge, giant problems. Layer on top of that, that there has been this huge influx of capital and funding from the federal government, not just the infrastructure bill. Obviously, that's a huge piece for the resilience community, but prior to that, there was CARES Act money, there was ARPA money, now there's infrastructure bill money. There's limited guidance about all of them. There's requirements to spend fairly quickly. There's lots of visibility from residents on the fact that now local governments have this huge pot of money to invest in their community. And so they're overwhelmed with almost the amount of money that they have at their fingertips and this huge set of problems they could be deploying capital against. And then on top of it, they're being bombarded with sales pitches. So it's, you know, this huge, we had a city official tell us that they get, no joke, 75 sales emails a day and 50 cold calls a week. And that's because this huge explosion of money and everyone wants their fingers in it. And so combine the like personal stress, the work stress of having these huge challenges ahead of you, all of this money and pressure, and then lots and lots of information overload. It means that city officials are just overwhelmed and carrying the world on their shoulders. And so I think that's an important lesson learned in thinking about kind of these broader challenges. And ultimately it comes down to the people who are implementing and thinking about kind of that perspective. So I think that's an important context for any conversation where you're talking about, you know, the beeps and squeaks of resilience. And I think the thing that surprised me the most in 2021 was actually that in the infrastructure bill, smart cities was only mentioned 4 times. That's a huge shift. I mean, I think there was so much investment in the concept of smart cities as this panacea solution to a lot of challenges. And the fact that this, you know, $1 trillion infrastructure bill was passed and smart cities was only mentioned 4 times is kind of mind blowing. And we can talk a little bit more about, you know, what that means and what that translates to. But fundamentally, what we see and what we're hearing from cities is that, you know, data is a means to an end. Technology is a means to an end. And smart cities was kind of wrapped up in this, let's deploy a whole bunch of sensors and collect a whole bunch of data and all of our problems will be solved. And what people have found when they've done that is that actually people and processes matter a lot. And that if you're just deploying tech, sometimes inequities are exacerbated. And so I think there'll be a lot of thinking in the next, you know, few months about how that shift occurs and what smart cities actually means in practice and what resilience actually means in practice. And so that's, to me, I think a little bit of a overarching shift that we're hearing, not only from the federal perspective also, but what that actually translates to on the ground in cities. So I'm really excited for this conversation, and it sounds like it'll be pretty lively given the group.
Elle, you raise I've had a couple of people scan the infrastructure bill because there's all of these, as the tech guys refer them to, Easter egg, little interesting, which I want to raise to all four of you in a minute. But I think we lost count at the 700th mention of the word climate and resilience in the same descriptor. All right. I think the only time it ever mentioned smart was, please stop reading this. It'll probably be smarter for you to not read these documents. But you raise an interesting point. Thank you for that. Paul, Please introduce yourself. Tell us a little bit about RISE and give us your perspective of 2021. You're on mute.
Of course I'm on mute. Someone had to do it.
Yeah.
So I'll be the first.
By the way, that should not be the new surprise phrase. I think that's going to be elected as the most used phrase of 2021. But go ahead, Paul.
All right. Well, thank you, Richard. Thanks for the opportunity to be on this panel. So my name is Paul Robinson. I am with RISE. I started RISE 4 years ago. RISE came out of a grant that the Commonwealth of Virginia got through HUD's National Disaster Resilience competition. We started up, we're in Southeast Virginia in a region called Hampton Roads. It's 7 cities in the region, 1.6 million people, about 3,000 square miles in total area. So it's a large area that a lot of people may know or may not know. We're a region with some major installations. We have the largest naval base in the world. We have NATO headquarters. We've got a major East Coast port, universities and hospital systems. And in many ways, we look like many coastal cities around the country and around the world in that we are threatened by flooding. We're threatened by flooding from the river, from the tide, but also some of the aging infrastructure can't keep up with the heavy rainstorms we get. And when you put them all together, it's a whole new world, and trying to keep the infrastructure, trying to keep the cities operating in that environment become more and more of a challenge. So just a little bit of a background on me. I'm an engineer, and that's probably all you need to know about that. So a lot of the government side of things is new, and the government and the Commonwealth working together is certainly something that I had not seen before up until about 3 or 4 years ago, and that's got to be more and more. And I'll talk a little bit about that in a second. What we do is we accelerate innovation and business growth around solutions to coastal resilience challenges, meaning the cities in our region, they know what their problems are. They know where it floods. They know where the stormwater infrastructure is weak or undersized, but they don't know the solutions. And we are able to describe these problems and put them out to the global community looking for new solutions. We are not a stand-in for the Army Corps for the big infrastructure projects, the floodgates, that sort of thing. But we focus on near-term solutions to adapt our infrastructure, performance under certain conditions, as well as to mitigate how that infrastructure is used. And we're looking for companies to come into this area to actually demonstrate their capabilities. We fund them, we help them find their customers and how they sell, that sort of thing. We help them pilot their projects, and then we help them go on to other markets. Our region is not the be-all and end-all market for companies to grow, but we're trying to help companies go from our region to help scale up to larger and larger cities. And we've had a number of things happen just recently where our process has been proven to be helpful to not just our community, but others. I think for me, lessons learned in 2021, that I don't know how you come out of 2021 without feeling that the effects of climate change and weather phenomenon are real and devastating, and they're not getting any better. And it's hard to come to that conclusion based on one event, but you put them all together, and things are not going in the right direction. And the question is how, what is that rate of change here going forward? But we also see on the good side that big solutions are needed, and in many ways, New Orleans was protected by a lot of the big infrastructure they put in this summer and over the past few years. but there are some near-term solutions, things that can be done. And we've funded over $5 million to over 30 companies to develop and demonstrate products. So there are some products that are out there, some capabilities being advanced that hopefully will help the community, and we can talk about that a little bit. Interesting discussion about the data, because we've seen that too. We've been approached a lot by sensor companies, and what we've found is that there are 2 data programs that have been successful with us, and they've all had a very clear and desirable use case, meaning someone's got to know what to do with the output, and it makes a difference. And one of those is bringing real-time flooding information to drivers. The other one is bringing real-time stormwater information to help the cities know what's going on in their stormwater systems and when the city's going to flood or not. So it's a whole new area, and I'm happy to talk about that some more, but it's very interesting hearing that from Elle there before. So I'll leave it at that, Richard, and we can go on.
Paul, will you take just a minute and describe, y'all were one of the first regions to get a sizable grant. And can you describe just for a moment for folks kind of what was the, kind of the tip of the spear of, how and what that grant is doing at this stage? Because it's very exciting, I think, to share, how y'all have leveraged those resources, because I think it then drives in some things I want to talk with Michel and others about. So can you take a second on that as well?
Yeah, so you may remember the NDRC program that came out of HUD, where a number of regions, states around the country put in proposals to get funding to build infrastructure in their areas. Well, the Commonwealth of Virginia was successful. They got $120 million. Part of that, most of it, 112, was to put in infrastructure in a neighborhood in downtown Norfolk. But it was the only proposal that had in there this idea of a laboratory accelerator to develop new ideas in the resilience sector, because very often resilience infrastructure consists of the usual companies putting in the usual stuff. So this was it was a great opportunity to bring this money in here, and the state matched it. But then we had to put together the program of how do you open it up to new ideas, to old problems that everybody has, in a way that meets the government compliance regulations. So that was a whole new world open to me, and we built this challenge program around that in a way that we've sourced ideas from all over the world, and that gives me hope that those ideas will go out from us back out to the world.
Perfect. I know we'll talk about some of the new programs for 2022. Michel, busy year for the Insurance Information Institute, busy year for you. I know that you love data. You're an economist. You've seen a lot of things come across your desk. So I'm looking forward to hearing about what you've seen so far this year, what surprises you, what, and then we'll talk about kind of what's coming ahead in the next round. But Michel?
Absolutely. The first thing, hi, everyone. This is not a background. This moves. I'm very proud of it. It took me a long time to get it framed perfectly. So happy holidays, everyone. Yes, the Institute, Elle, you were mentioning how your group is there to distribute information. We're very much that as well on behalf of the insurance industry. And we have sister organizations such as IBHS, that they're the folks who burn down homes, who look at tornadoes' impact, and have created, hurricane-proof devices and so forth. We have the folks who do the cars. They're the ones who invented the dummies and so forth. And what we're focused on is on communicating. And this element there of community education, Elle, for example, is very important to us, and local community leaders. So over the course of the last few years, actually, we've really looked at what we've always done. Resilience, maybe it wasn't called that way several years ago, but the insurance industry has always been there to work with the insureds, with the public and businesses to reduce the impact of extreme weather and fires and so forth. It's a place where our interest as the insurers are very much aligned with that of our insurer. No one wants their house to burn down. If it does burn down, we obviously want the insurance company to be there and pay and so forth. But one of the things we've learned is that insurance carriers and their agents and brokers are often what we call the first economic responders. In that, I had a tornado here, and here being an hour and a half north of New York City, doesn't happen often. I was traveling for work, and smart house. I definitely made it all smart and so forth, and everything went down, and I was wondering what was going on, and tornado went through. After figuring out that everyone was safe and so forth, I called my insurance company, and they were really, the first people to help me walk through this. And they also came up afterwards with ideas and solutions to reduce losses. So one thing that Richard and I have done as part of our partnership is to showcase some of these technologies. And in the same way that carriers are there to recommend central alarm, burglary alarm, fire alarm, there's a lot now that we can do, little valves that can shut down the water if you have a leak, little water sensors in your crawl space, the snow house in the crawl space, or in your basement if there's a leak. Win-win in terms of the industry and so on. But we decided in the last several years to really become a catalyst for that at the Institute, and to provide education and different tools as well. So I encourage you to go to resilience.iii.org, which is our hub for a lot of the information that we've done over the years, but also new tools that are really focused on education and understanding your risk profile. And that would include a place where you put your zip code, you put your address, even, and it gives you a sense of the risks that you're facing. We believe that if we understand the risks, we can start doing something about them. And sometimes that's getting more insurance, getting better insurance, making sure that if you're exposed to flood, you'll have external flood coverage. Basic insurance policy will not cover external flood. It will cover a mechanical breakage flood. So, your boiler breaking down. Very technical stuff here still. So your broker, your agent can help, but we're trying to make this available, accessible to people to understand that. So a lot of our programming this year has focused on this. And again, great partnership with Richard and his organization on bringing technologies, small to big. One that I think we all remember, two that we like to quote, is one that's focusing on, I learned a word that day, which I don't remember, which means I didn't really learn it, but buoyancy of water, which I think is just a weight of water. It has nothing to do with buoyancy, and it's just a weight. And it just goes down and it raises a barrier around your house. Expensive stuff, very efficient, but expensive. But there, a whole range there of option, being able to what I call the Hershey's Kiss, which is a tarp, military grade tarp that you can drive your car on it and maybe even put certain things and it protects your car. You can anchor your car as well, because cars do float and do move away. And if there is a way that you need to leave afterwards, that you need your car to be able to do that in most cases. Those are some of the elements. And we've also come up with resilience ratings. It's my baby in many ways, though many people helped. So I really can only say that I was a facilitator. But those are the coastal and Gulf area states, and we're trying to help folks understand what's their vulnerability. We've done work on the speed of recovery post extreme weather events. We're now using climate change and climate risk. I don't know climate change. I need to be careful. Climate risk, certainly. And that's very indicative of how things have changed in several years. I think everyone can differentiate the politics of it, the science. That's probably a bit more complicated. Politics and science these days, not that easy to differentiate. But certainly we can differentiate the impact of it. On that, it's not just the fact that there is greater frequency and greater severity of these extreme weather events. There's also more people And that's something we need to tackle as well. Where are people moving? What are the incentives to do so? The economic incentives, which quite often, it's easy for folks to say, oh, you shouldn't move there and so forth. What are you thinking? Well, in many cases, that land is more affordable because it's in flood zones, and not everyone has the choice to pick where they live. Economic opportunities and the intersection of a variety of socioeconomic factors and equity come into play here. There are communities that traditionally have been underbanked. There are communities that traditionally have not had access to insurance as much. So we're looking at initiatives to bring insurance, to explain it, and so forth, and to have these tools as a way to encourage not only resilience, but also advance equity and equality in our local communities.
Thank you, Michel. Y'all work on so many different things and across so many different avenues within the III and the institutes. I think let me highlight off of what you said and tie it back to Elle, Paul, and Jack. Three things I'm kind of hearing, three things, all right? One is data, all right, and how we are now using data to inform resource allocation, and even, and how we're looking at that data informing risk and risk transfer. That's one item. Second item is engagement of a lot of different stakeholders. Some have been at the table, some frankly have not been at the table for a variety of reasons, but need to and should have been at the table. And then third, the overwhelming nature of lots of data, lots of money, lots of wonderful ideas of how do we ultimately align it to getting some real impact. And I'm going to start on that one first, but let you all, respond to any of these three themes. But one of the concerns, Elle, that I have, you've heard me say this. One is we don't make procurement easy, never have. Sad but true, when you put a lot more money into the system, it only gums up the procurement process even further. I'm curious, and it ties in a little bit also, Michel, to some things that we've talked about as insurance, as economic capital and all. But Elle, where are public-private partnerships been in 2021? It'll tie a little bit to what we hope to see in 2022, but kind of tell me what you're seeing happen in 2021 around procurement and public-private partnerships.
Yeah, so, and I wish I had some specifics here, but I don't know that there's been a ton. I mean, I think there's been a lot of collaboration, which is useful, right? I think there's been the pandemic forced a lot of collaboration amongst groups that knew each other but weren't necessarily working alongside each other. And we saw this very much at the local level in responding to immediate challenges to get food out to homes, right? I mean, that kind of like food insecurity, economic resiliency, like groups came together to really move the needle on that because they had to. And that's lowercase P3, right? That's lowercase public-private partnership. It's not the
still
legal,
critical, still important.
not the legal construct, but still really important. And I think those bounds have been those relationships have been strengthened, which is great. And that came a lot. There was a lot of just tech adoption and software adoption to be able to streamline those processes and make sure that people could talk to each other and align who was doing what, when, and where. I mean, we were talking to folks in the Bay Area who you would think were like the most advanced technology, and they were still doing that coordination on paper. So I think a lot of shifts have happened that have made, collaboration amongst a diverse set of organizations easier to do, which is important, that kind of collaboration. When you think of capital P3, I think there's so much federal money coming in that there wasn't a need to think about private financing. However, the money runs out. right? And it's all money that is intended to be spent on long-term game-changing projects, resilience, right? You start a resilience project with a feasibility study and understanding the risk and mapping the data and mapping the problem and mapping the challenge, getting the stakeholders organized. There's funding available to kind of get the ball rolling on that. But eventually, right, that money is going to run out. It's short-term money. And so that's where I think a lot of the conversations on public-private partnership are starting to emerge, which is, this is a long-term problem with short-term money. How can we coordinate with insurance industry, with philanthropy, with private sector partners to make long-term investments? Because we want to think long-term. I mean, I think people are recognizing that thinking long-term is essential. And so it just comes down to, right, that's a gap filler. P3s are always a gap filler. They shouldn't be the leading story. They're the way to kind of move the needle and finish out the project. And that's true today, and maybe more true today with all of the money that's come in. So I think that's what we're hearing and seeing.
And you're triggering a couple of things. One is a lot of this money still requires a local match. A lot of this money requires operations and maintenance after it's up and going. So Michel, you know, we've talked, you know, a lot about this insurance as economic capital. Did you sense, and progress is going to sound like it's a judgment, but have you sensed any kind of steps forward in 2021 around how this insurance as economic capital from an investment perspective made progress, moved along this year, or is that something still to be piloted and discovered in the new year?
I'm going on holiday tomorrow, so I'm probably a bit more direct in my answers because I'm a bit more relaxed. Yes and no. I think the industry has been a thought leader for a long time, especially on the European side, and of course on the American side as well. The industry in the United States is ground up. You know, it goes back to the mutuals, Benjamin Franklin, and so forth. So we really have a great opportunity there to shape how people think throughout the country. You know, it's not just a coast thing; it's also in between. I think the focus of the last few years and the successes of the last few years have been around understanding the importance of climate change, of climate risk, of extreme weather events, whichever one of those. I need to look at the last memo we're supposed to use. But you know, the point there is that and I think that's the biggest success, is that agents and brokers, insured facing people, insureds, are understanding that these are important things to consider, that one needs to get it covered appropriately. That in some cases, in California, for example, you may be in a situation where you can't get coverage with wildfires, or the coverage isn't available in economically viable terms, either for the insured or for the insurance companies. You know, we're in this together. And that's the important part here. So I think this element there of moving beyond the politics and realizing the need to work together increasingly over the last few years is the biggest achievement. Now, you've asked specifically about insurance as economic capital. Just to, not to bore everyone, but we as an industry have some of the largest assets under management, because that's what we do. We take and we invest in long-term assets, traditionally low-risk assets. A lot of this is regulated. We are mostly in municipal bonds and invest in the equity of other insurance companies, trying to build partnerships and so forth. We've never really been in by virtue of that, in equities in sectors that are coming under pressure because of, you know, carbon emissions and so forth. You know, we're not a good target for divestment campaign in that regard. You know, we're just not invested in those elements, and we're very proud of that. It's a coincidence because that's not what we did, but now, you know, we're already a bit ahead in that regard. In terms of, and that's where I hope that we'll see much more next year, is being able to take some of those bonds, some of those investments in the fixed income market and the project finance, and allocate them, understanding that the primary responsibility is to provide a return to our insureds, in that the return is that we will be there if something happens to them. That's our first job. And that's our insurance as economic capital. We're the first economic responder. We're there. You get a check, like tornado went through, I got my check, I felt better, I was able to rebuild. And that's especially important if someone's resources are more limited. Rebuild. I always say, you have a flood. I say this to friends of mine out of school. I was always into insurance, so I always had my renter's insurance. But if you get something and you lose your beginning of your career and you lose your clothes, that's like several $1,000s to right there. Americans today on average have a few $1,000s in savings, a bit better now than it was before the pandemic. But losing your clothes, you can't go to work. You need that money to be able to continue and so forth. So just a very good example. But in terms of that's the economic capital. In terms of investing and supporting actively, yes, it's happening. But as anything there, we have priorities where we need to work with regulators to invest in sound projects. We cannot invest in, we cannot let go of certain returns in order to have a social good that we support, that we all agree on, because those margins are actually fairly small when it comes to providing insurance. But that's the one area where I think we will be seeing ongoing progress. So that's the part that is exciting to me.
And let me play off of that, because Jack, you raised it at the very beginning. I'd like to have you and Paul share an observation or two. But remember, we talked at the very beginning about cost benefit analysis, about the return on investment. I think that's driven partly by a lot of new data insight that gets you at a granular level now that we didn't have before. But I also think something that I'm hearing, Elle, from a number of these stakeholder engagements around the country, and to something that Michel said, and that is shared risk. Where we are now all looking at that, I hate to say this, but our 23-year-old clipped his car. Oh, Dad's not a problem. We've got insurance, and I kind of hit him in the back of the head, going,
I don't want to hear that. I don't want to hear that.
But it's taking responsibility and ownership, right? So, Jack, I'm curious, as you talked about hazard mitigation projects and this recognition that the cost benefit for pre-disaster risk mitigation, I'd really like to hear from you and Paul how it's playing out, in Georgia and Virginia and other places. So, Jack, you want to jump in real quick?
Yeah, absolutely. I think the biggest piece, I think that's the pressure point right now, is that as we're getting sort of more progressive in our approaches to this disaster risk reduction, right? I'm thinking about things like, natural systems, green infrastructure. We're really at the community level, right? To Elle's point, we have a service delivery, a quality of life issue that we're trying to solve, right? And oftentimes we have this comprehensive look on these co-benefits that we're going to have increased landscape, we're going to have maybe reduce heat island, we're going to reduce flooding, but all these elements that come together. But then you sort of pigeonhole your cost benefit to, in my world, disaster risk reduction, right? What is the sort of to use that maybe green infrastructure and stormwater? It's all about how much less often is that road going to be unavailable to us. And so you may have this upfront, more expensive project because you're bringing in all these co-benefits, but then you don't quantify them particularly well, given the framework that you've been given for this cost benefit analysis. So on a day-to-day, that's a real issue. One piece that I think, just to tie it into Michel's points there, because of referencing the fixed income and the municipal side of things, where I sit, we sort of look at the other side of the equation as my client base is the issuer, not the investor in that municipal bond. And so I think that's an opportunity moving forward, again, when we're really trying to frame this with community, sort of the chief financial officer. Obviously, credit rating is one of the end-all be-all metrics for that local government. And so as we see that climate data and what is sort of truly material in municipal credit rating, it sort of flips that mitigation investment conversation from can we afford to do this to can we afford not to do this, right? If you're being punished on the municipal credit rating side, and I think we can all sort of see that coming. We see some of the rating agencies, some of the sort of acquisitions they've performed. Now I'll leave some of the proprietary names out of that for the sake of this conversation, but I think we can sort of read between the lines and see where we're headed. So I think that's really meaningful too, on that sort of opening up that return on investment to say, okay, we may have this cost benefit analysis tool for a particular grant we're pursuing, or we're working with the core, to Paul's point, sort of micro scale cost benefit. But then from the municipal side, that local government, I think, really needs to broaden that sort of balance sheet and say, what is the cost of doing nothing? What are these co-benefits that we're passionate about that may not really be a focus of the grant, but are material to us locally?
Yep.
And to that, if I may, is that okay if I add something, Richard?
Yep. Yeah.
Great. So, to your point, Jack, the Fed, the Treasury are concerned about systemic risk in that regard. So they're starting to, the insurance is again, of course, at the state level in terms of regulation, but just to focus on that, the rating agencies have started to more actively look at vulnerability to extreme weather events as a factor in credit ratings. There are some cases, there was one recently of a school board in New Jersey that had issued self-insured and also issued bonds, and everything was destroyed, and therefore they were no longer able to repay any of those bonds, and they went directly to junk status, to default, more specifically. And we've seen that in some municipalities that have been destroyed and so forth. Those instances are happening increasingly, and the agencies are looking more at it. But I've worked with the agencies in the previous life extensively, and it's a bit like sovereign risk. There's an awareness of it. It comes in, goes out. There's limited experience in the agencies in terms of being able to understand how to rate this. We, to your point, Richard, have not much data on these tail events because they are still tail events, and they'll probably remain tail events even if the tails get fatter. So, to your point there, Jack, there's a little, as carrot and the stick, a little more focus on those, and impact of those on ratings may actually facilitate that. But I'm not seeing that happening fast enough. I
So
have
Paul,
to say.
I want to come back to something, Michel, that you raised about the carrot and stick in a second. But Paul,
I didn't really say that. I did not really say that.
No, but I want to leverage whatever you didn't say. Paul, observations?
Yeah, there's a couple of things here, and I am not in the insurance business, other than I got insurance on everything I have. But we've been looking at two possibilities here: one on the investment side of things, and one on the insurance side. And we've funded a company that has taken advantage of the CPACER legislation, which is a way of, and I'll explain it in the way that I understand it, is that a property owner, a commercial property owner, can do resilience-related improvements to their property, to their building, and then roll it into a voluntary assessment on its mortgage or on its taxes, or basically this can become a revenue stream, a 15 or 30-year revenue stream in certain cases. And what we worked with a company, Virginia PACER Authority, that is linking private investors to these property owners. So in a tiny way here, and tiny in the big scheme of things, but you're starting to get an opportunity for private investors to invest in the property owners wanting to protect their buildings, and that turns into a revenue stream for them, an annual revenue stream, and it's quite attractive. And so that's just taking off now. It requires legislation for the region and the municipality to adopt the CPACER legislation, but it's one example of how private investment can get injected into the whole process.
So let me leverage this conversation, knowing that graciously.
Can I raise one just bring one other side of it is on the NFIP side. We're working with a company that is going to come into our city and map out first floor elevation of every property.
Yeah.
Okay, instead of having to pay for a surveyor to go to every property with the stake and the bill and the whole thing, they're going to they've done a pilot project for small parts of the city. They're going to do it citywide. That has benefits for the city, it has benefits for the residents, and maybe has benefits down the road for NFIP and saving it some money and extending its life. So the couple of areas there that I see.
And I think that's one of those great scenarios that describes kind of why we're all, here is there's these incredible pilots and opportunities that are emerging to, scale. All right, I know that I squeezed into Elle's schedule for today and Michel's schedule, and I know that we're going to lose the two of y'all, that Jack and Paul are going to stay with us through until 11:15 because we want to share a couple of announcements and things that are underway. But let me take advantage of Elle, you and Michel being with us. What's one big thing that you think is on the horizon for 2022? What's going to be Michel, what's going to be the big thing that we're going to be talking about a year from now? Or what would you like to see us be talking about a year from now? Elle?
That's a big question. This is probably not really, I don't know if this is the answer you want. But in my mind, in a year from now, I hope that we are talking about resilience projects on the ground that have effectively sequenced all of the money to actually get to a project. I think that it's such an overwhelming task, when you're thinking about economic resilience and broadband investment, or you're thinking about physical resilience and you're thinking about flooding or drought or wildfire, the perils of preference, if you will. Those are just such huge challenges. And there's, as I said, this overwhelming amount of money and interest right now. And so I hope a year from now, cities have effectively said, this is the scope, this is the project, and they've had all the support they need in being able to sequence the funds to get the most bang for their buck. And we're not going back and saying, oh, I wish that we had spent money here because we had this money here. And, so I hope that that's the conversation that we're having. And this is really a example for future ways to think about federal funds as a way to catalyze and jumpstart the types of investments that communities actually want. So I hope that's the conversation we're having in a year. I know that that's probably ambitious for a year, but I hope that we're getting there.
No, but look, this isn't the first time that this country has gone through, or a lot of regions have gone through crisis. Okay, yeah. I will not diminish the time left for Michel, but I will say when I was.
But you will. That's why we love you.
But when I was running the Economic Development Administration way back is when the earthquake hit San Francisco. Okay. And it literally, shut down the entire Bay Area economy. Well, what we realized was that EDA was but one of the funders. And we had to get everybody at the table about bringing their resources to the table. It isn't the first time, Elle, that we've done it. It just somehow new stakeholders, new folks. Michel, a year from now,
a year that hopefully a year of less net cat than this year. I mean, it started tough with even Texas earlier this year. So that would be the first thing. The second thing, not losing on the opportunity of building back better and thinking about where we build. I think that's really at this point, the immediate impact is as to where we build and then where and how we rebuild.
Right. So on that scale, and again, for the very first time, and I discussed this with some folks yesterday, and this is for Jack and Paul to jump in as well. But Elle and Michel, one thing I'll raise real quick before you leave is we've got a $1 trillion infrastructure bill. No joke. We have over $1 trillion of unspent presidential declarations. We have $12 trillion of generational wealth. It's not capital. And it sure as hell doesn't seem like it's technology, all right? So I think, Elle, to your point, Michel, to your point is, can we all collectively figure out what are these new governance structures, right? Michel, thank you so much. Happy
Thank you
holidays.
so much, you all. Elle,
know.
Paul, and Jack, such a pleasure to meet you, everyone else in the audience as well.
Thanks so much, all.
Thank
Happy
you.
holidays.
Okay. So, Elle, before you go and then jump in with Paul and Jack talking about the crystal ball, but it sounds like what we're all looking for are some new governance structures, some new ways to deliver. And frankly, they're not as you know, these are not new, but am I making sense that that is something maybe 2022 could and should be about? Elle?
Yeah, yes.
Okay.
Yeah.
I know you need to
Yeah.
scoot, so
Thanks,
thank
all.
you
Appreciate
again.
it.
Thank you so much for joining us. I know you had limited time, but this is great. Happy holidays
Happy
to you
holidays,
and
all.
Ellery and the team.
Well,
Bye.
Great. Right. Paul, Jack, jump in with your, a year from now, big prediction, and then some things that you see along the way, because I'd like to hear, Paul, what you've got underway, Jack, what you're seeing, in Georgia, but also amongst all of your other peer states. So Paul, you want to jump in first? Where are we going to be a year from now, and what do you got going?
Yeah. So the crystal ball here is not, I don't think it's a real ledge to go out on to predict that there will be other bad weather events, in particular flooding events. Somewhere in the country, around some coastal area, there'll be another flood event. It's all that's going to do is just to sharpen the focus on the need for near-term and longer-term solutions. Where I think we can think longer term is in the idea of other sources of funding. Yes, the federal dollars are coming through and the state dollars too, but here in Virginia, we're seeing funding towards resilience infrastructure come out of the Regional Greenhouse Gas Initiative, with the so-called RGGI money. That's like 7 states, Northeast, including Virginia, and it's focused on carbon credits to allow for power companies to allow their coal-powered power plants to keep going. And again, I'm explaining it so that an engineer like me would understand it. But bottom line is that in just 1 year, that those credits have raised over $100 million for resilience infrastructure in Virginia. And what we are trying to do there is, so that money can come from the Commonwealth to municipalities, and we are trying to meet the municipalities' needs with our companies, so as they can do something quicker and cheaper. Right. We've got one company that can build an oyster reef on site, so they can do more cheaper, quicker, and oyster reefs are very important living shorelines. Right. There's a pathway there for an addition. It's another source of funding. It's a way that the money can be stretched out a little bit more. What we are doing also is, what RISE is doing, we have been asked to expand our challenges that we're running right now to the rural community. So we're dealing with the urban environments problems, but we're now looking at rural. And rural deals with septic systems in high water table environments. It's dealing with dredging materials. There's all sorts of other areas, other issues there. Money's coming into the rural areas from things like the Virginia Community Flood Preparedness Fund, which is that RGGI money. So just if anyone's interested on the webinar here, go to our website and take a look. But we're expanding out here. We want to address the rural communities' needs as well as the urban communities' needs.
Yeah, so I think what you've just, one amongst many things that you shared, one is Virginia's got some tools already that can be replicated. Yeah. And then second of all is that RISE is rolling out some additional new grand challenges that we want to make sure, the hub and the collaboratory network family all get a chance to engage in, because I think, Paul, you've always said to me, and I think you've emphasized this, is that your focus, quote unquote, is Virginia, but that RISE is really a part of a national platform, and that any and all of us that have solutions, technology, things, practices that we want to engage with are invited to the table. So
absolutely. Absolutely. We're reaching out to other cities now, so we'd welcome those discussions.
Jack, you got to take yourself off of mute, but tell me kind of what a year from now, what's happening on the ground in Georgia. What do you see with some of your colleagues around the country?
Yeah, absolutely. And I'll take a swing at the governance piece as well that we had looked at.
Yeah.
I think a big piece there, right, is that ultimately all of these activities, all this funding, there's still a point of sale, right? When you can say $1 billion, you can say $1 trillion, ultimately there's still a local point of sale that typically local government, or, to Michel's point, between the insured and the insurance professional, between a homeowner on some of the programs that we talked about there in the Commonwealth of Virginia as well. And so particularly with that lens of equity, I think we need to be mindful in this governance structure that by definition, if we're going to be sort of pro-equity, there's going to be some pain points in terms of the efficiency of delivering, because by definition, the system that led to the inequities is going to therefore be inefficient for those folks that we are now trying to reach out to. And I would say, to borrow kind of the supply chain terminology, it's not only last mile delivery, it's also first mile delivery in terms of getting these folks into the process in the first place. So it's closing the deal, but also getting them to the table in the first place. 2022 for me, thinking a lot of sort of the Bismarck comment of politics being the art of the possible, right? I think, none of 2022 is going to happen absent the midterm elections, right? I think that's a big elephant in the room in terms of Build Back Better. Certainly, again, on the federal side, the sort of the second half, but the bigger half sort of numerically of Risk Rating 2.0, this being kind of re-rating of National Flood Insurance Program policies. That's going to drop April 1st. You could certainly see some perhaps congressional intervention there. And so, but where I hope to be, I think really is looking at this maybe to take a little bit of Elle's points on the sequencing and the jump start. It is really that we've been talking about sort of these shovel-worthy projects, not just shovel-ready. I think that's the big difference between probably a decade ago in terms of big influx of federal funding versus where we are today. Is that I like that sequencing terminology that you use, right? We should be setting ourselves up for success. Though we have this limited funding, it is sort of this chronology that we can follow in terms of we can have some reasonable fiscal year 22, 23, 24 expectations to move forward so that we're setting ourselves up again for worthy projects, not just ready. Because when you look at the asset life of some of these projects we're undertaking, we can't afford to get them wrong because they're going to be in the ground for a multi decades in terms of the asset life. And so recognizing that the hazard profile may be changing, the underlying demographics in the community may be changing. It's really important for us to get these.
I think, Jack, you're raising a great point, and that is in the expediency of trying to get as much money out the door to help with economic recovery and jobs and all. This is also a chance to get it right. And so shovel ready versus shovel worthy is a wonderful, reference point. With that, knowing that we're going to wrap up here, I just want to share a couple of things that the Hub has been working on, much to the delight of all four of the participants today who have contributed pretty significant and play a leadership role in this. Paul, because we look to, in 2022, move from what we've done this year. 2021 under the Hub and the collaboratory network has really been about building out this innovation ecosystem and connecting dots. 2022 is really moving into implementation. And I'll just highlight a few quick items. You know, the first two actually deal, top of the page here, deal with workforce skills, talent development. We can't grow companies if we don't have the talent to help them grow, and especially be able to tap into some of the C-suite of the insurance and reinsurance and others. So we've launched an initiative called Talent on Demand, which links us into over 40,000 individuals across global and national insurance, reinsurance sectors that we look to invite into serving as board members, come on board, leave their companies and join some of these growth stage and mature companies. We've also identified, Paul and Jack, within that 40,000, we've identified 2,700 individuals that are leading the investment arms for the insurance and reinsurance. On the other end of the spectrum is we could have all the technology, equipment, data science in the world, but if we don't have people who know how to install it, implement it, maintain it and operate it. And so we've launched on a national basis what we call the Resilient Citizens Corp. And we're rolling that out in a pilot initiative with the fourth largest community college in the country, which just happens to be right down the road, kind of convenient for me, but we get a chance to roll this out, Jack and Paul and others, to other regions and locations around the country that we want to talk with you and others about. I'm going to go around the edges here for the moment, and then we'll talk about the forum. Michel raised this. You all have talked about the issues of diversity, equity, inclusion. We decided not just to talk about it, but begin to do something about it. So in 2022, we'll start with a pilot of identifying 50 small businesses that are in low to moderate income neighborhoods. Once they're identified, they will receive a voucher for at least 1, if not 2 years, to cover their flood insurance, their property casualty insurance. Nothing worse than to have a small business, and especially one in a low to moderate income neighborhood, that just suddenly gets wiped out. But we're also going to support them with some technical assistance to make sure that not only are they prepared, but to find ways where their businesses actually fit into serving larger resilience projects and opportunities. We want to roll that all out across the country. Then we talked about data today, a lot about data. And we've had, Jack, you've heard me say this, we're drowning in data and thirsty for intelligence. So we have launched the Resilience Data Exchange to bring the two major insurance organizations, the Insurance Information Institute, Reinsurance Association of America, together with their existing partnerships of FEMA, National Weather Service, NOAA, Army Corps of Engineers, academic institutions, and entrepreneurs to really get to this issue, Jack, that you raised again at the beginning. And that is, how do we now really come up with a new cost benefit analysis across the board? And how do we look at the return on investment where it really shows the impact? And by the way, Jack, something that was also touched upon here is there are very specific dollar returns on investment, and then there's very specific offsets. And we're looking at counting offsets. If we do something over here, does it offset a cost or create an impact over here, which should fit into that cost benefit analysis. So we've been active this year, Paul, thanks to you and others with your patience of beginning to put these pieces together and how we leverage what RISE is doing and others. And then on February 3rd and 4th, we will roll out the inaugural Resilience Investing Forum. It will bring together over 250 individuals. Hopefully we will all be in person, but I wanted to give you a sense of where we're headed. We've got some of the initial speakers lined up, and I know Jack and Paul and Michel and Elle will be participating in all of this. But this is an opportunity to not just talk about our early stage startups. We're going to cover the entire, gamut all the way over to large scale infrastructure investing. And so you see that, Francis Bouchard, who, comes out of Zurich, part of the Arst Rockefeller Resilience, now with Marsh, now taking on a new task at Marsh. Brad Doxer, great friend who is a leader in the green investment, green facilities management. Matter of fact, Brad has the Fortune 100 as his clients, but he's also a global trustee with the Urban Land Institute on their sustainability and resilience. And Scott Sikorsky will also be joining us with Fitch Ratings and showing a few items that how the rating system, right? Jack, you said it earlier, how this all fits in. Let me close on a couple of other quick announcements. And each of y'all will be getting it. But we're looking forward to forming a new partnership and relationship with Statebook International, which is one of the leading new platforms on socioeconomic data and dashboard, which gets us really deep into what's happening as we've talked about the impacts at a granular level. We will be rolling out a new CRADA, which is a cooperative research and development agreement. Paul, I think I may have mentioned this to you, but we are signing a CRADA with the Engineering Research and Development Center of the U.S. Army Corps of Engineers, to Jack's point about cost benefit, but also about ways to engage new engineering tools and technologies into and across the Army Corps. And we felt that working with ERDIC, the Engineering Research and Development Center, was critical. And then we look forward to our newest node in the collaboratory network, which is the Silicon Valley Insurance Accelerator, coming on board. So we've been busy. Hopefully next week I'll get, if y'all will, Jack and Paul and others, if you'll give me a chance to take a breather for about 10 days. And then I promise I'll get right back to it. But to that point, I think we've had a great year of putting the pieces together. What I feel pressure is to actually get something done. And I usually use another S rather than get something done. And I think it's incumbent upon all of us to look at taking what we've heard today, the great ideas, the great suggestions, where we all want to be by the end of 2022, and really come together and go work on these things. So hopefully you see that we put some of the tools together. We've got great tools in the way of what Paul and Rise are working on and the other members of the network. And Jack, we look forward to having you join us in 2022 with all of your great insight. So we are almost at the mark. Take 75 minutes of your day, and hopefully for those who joined us, this has been wonderful. And for those who are going to listen in once we post it on YouTube, we welcome all your feedback, your partnership and collaboration. Jack and Paul, any quick closing comments or thoughts?
No, it's going to be a great year next year. Thank you for including us in this and the future events you got. Thanks, Richard.
Well, and we want to repost, as I've said, the grand challenges, because that's exactly what Rise brings to the collaboratory network. You all are our grand challenge partners. We look forward to getting behind you and supporting you all in that effort. Jack, any quick closing comment?
Yeah, no, nothing technocratic here. Just want to wish peace sort of to everyone out there, engaging, today in person or viewing the webinar after the fact. Obviously, we've all been through a lot. And so just as human beings, I think, peace is something that I wish for everyone sort of this holiday season. So thanks, Richard.
Yeah, good health, good happiness to everybody. Please be safe with your families and friends over the holidays. Enjoy. What I always jack into every conversation now is enjoy being with family. Just eat a lot of dessert. We deserve it. All of us deserve a lot more desserts over the holidays. Thank you all. Godspeed, and we'll talk soon.
Thank you.